If you're in the military, a veteran, or part of a military family like me, you've heard these two names your entire life: USAA and Navy Federal Credit Union. Now, if you're new to military life, maybe you're not familiar yet. But the question you might be asking is, which one is actually better for your money? Well, I'm going to break it down category by category: banking, savings, loans, insurance, so you know exactly where each one wins and where it falls short. Let's get to it. First, a note about USAA. You need a direct military connection. You can be active duty, a veteran with honorable or general discharge, or an immediate family of a member. That's how I became a member. My dad, he was career Navy, and when I needed auto insurance, USAA was a no-brainer. Navy Federal is much more open. Active duty, veterans, DoD civilians, contractors, and a wide range of family members are all eligible. Let's talk about bank branches and how you can access them. If in-person banking matters to you, this part is important. USAA's banking segment has always been primarily a digital bank. It has a handful of financial centers, mostly located near military bases and academies, open Monday through Friday. But if you're looking for a traditional walk-in branch, USA is not that. Navy Federal, that's a completely different story. It's got over 350 branches, including locations on military bases around the world, plus 30,000 plus free in-network ATMs. Both give you strong ATM access. But if you want to walk in, talk to a human being, and handle something in person, Navy Federal is the only real option here. Let's talk everyday banking. On checking, both USAA and Navy Federal offer free checking with no monthly fees. Navy Federal gives you up to $20 in ATM fee reimbursements depending on the account. USAA offers a comparable ATM rebate program as well. Pretty even here. Savings, that's where things get more interesting. USAA standard savings accounts currently pay somewhere in the range of 0.01 to 0.05% annual percentage yield, what you earn on your money. That's a fraction of 1%. But for most balances, you're essentially earning nothing. Even their Performance First account, which requires a $1,000 minimum, that doesn't get competitive until you're talking about $500,000 or more. Navy Federal's standard share savings account sits at 0.25% APY. Their money market account goes higher depending on your balance, up to around 1.35% at $50,000 and above. But it's still not going to change your life, but it's meaningfully better than USAA. When you look at regular savings accounts nationwide, the average APY is only about 0.38% right now. USAA's savings rates are generally in that same ballpark or even a bit lower on many balances, typically well under 0.50% APY. Navy Federal's basic share savings account currently pays around 0.25 APY, which is slightly below the national average. Although some of their money market tiers can go higher if you keep a larger balance. So even though USAA and Navy Federal are solid for military-focused banking, neither one is really competing with the top high-yield savings accounts on interest alone. Now that's where SoFi comes in. SoFi is not a military bank, but when you're talking about savings rates, it belongs in this conversation. Right now, SoFi is offering 3.1% APY with an eligible direct deposit, and new members can get a 0.70% APY boost for 6 months. That brings it up to 3.80 APY. That's roughly 10 times the national average. And SoFi is offering a cash welcome bonus on $50 to $400 when you open an account and set up an eligible direct deposit. $50 if you direct deposit at least $1,000, and up to $400 if you direct deposit $5,000 or more within their bonus window. So for a lot of military members and veterans who already have steady direct deposit coming in, SoFi can be a great sidecar high-yield savings account. You keep your core relationship with USAA or Navy Federal, but you park your emergency fund or extra cash in SoFi to earn a much higher rate and grab that sign-up bonus. And if you're interested in SoFi or other high-yield savings accounts, we'll leave a link down below where you can check out the current offers and sign up for free. And without direct deposit, SoFi pays 1.20 APY, which is still better than what either USAA or Navy Federal pays on standalone savings. Now the key word here is complement. SoFi doesn't replace Navy Federal or USAA. It works alongside them. You use Navy Federal or USAA for your military-specific banking. Use SoFi to actually grow your savings. That's a setup a lot of service members are running right now, and it makes a lot of sense. If you're financing a vehicle, both of these institutions are worth knowing. but they're not equal. Navy Federal consistently comes in with lower starting rates. Right now, they're advertising new car loans starting around 3.89% APR for well-qualified borrowers. They also offer a rate discount for active duty and retired military with direct deposit, and there's no origination fee. USAA is competitive, but they typically come in higher. They're starting around 5.49% APR as of this filming. They do offer some flexibility that Navy Federal doesn't, like syncing your payment due date to your military payday, which is genuinely useful if you want your bills to align with how you actually get paid. For mortgages and VA loans, both are strong lenders. Navy Federal's Military Choice Loan is a solid option for members who already use their VA entitlement. On rates and overall loan variety, Navy Federal tends to edge USAA here too. If your rate is the priority, Navy Federal usually wins the auto loan battle. This is where USAA earns its reputation. USAA's insurance products, auto, home, renters, life, they're consistently rated among the best in the country. Not just among military banks, among all insurers. Their deployment protections are strong. Their claims process is well regarded, and their mobile app is genuinely one of the best in the industry. I can personally attest to their service with auto insurance. I've relied on USAA since my very first car, and I'm never going to give them up. Navy Federal does offer insurance, but it's primarily through third-party partners. It's not really in the same league as USAA on this. If insurance is a big part of your financial picture, and for most military families it is, USAA still sets the standard here. No debate. A couple of details worth knowing. On early military pay, Navy Federal posts military pay up to 2 days early if you're using their free active duty checking account. USAA posts 1 business day early. Small difference, but if you're budgeting tight, that extra day matters. On customer service, Navy Federal offers 24/7 phone support plus live chat during the week. USAA has strong customer service, but not fully 24/7 across all services. They both have solid deployment protection. Both offer early pay. Both have credit cards worth looking at. Navy Federal's Cash Rewards card pays a flat 1.75% on everything. USAA's Cashback Reward, that's about 5% on gas and military-based purchases up to a cap. Then it drops to 1%. So whichever one wins depends on how much you spend on base. Which should you choose? Well, here's the honest answer. You don't need to choose. Each has a purpose. Navy Federal is great for military members and veterans because of not only the in-person branches and their great customer service ratings, but also their free check-in. No fees, no minimum balance, and also free traditional checks for your checkbook. Navy Federal also has competitive rates on CDs and money market accounts. For CDs, most standard certificates offer highly competitive APYs and require $1,000 to open. They do offer specialty CDs if you have more cash to invest. USAA wins hands down for insurance. Now, if you want banking, insurance, auto loans, mortgages, retirement accounts, and investment options all under one roof with one login, USAA is pretty hard to beat. Its insurance products, especially auto, that's where members tend to get the most financial benefit. Its digital platform is also arguably more mature, having pioneered mobile deposit back in 2006. Now, if you're actually looking to grow your money and make it work for you, not just let it completely atrophy due to inflation, then I would consider opening up a high-yield savings account with SoFi. Each one does something the other two don't. And if you're serious about making your money work for you, that combination gives you best in class across the board. The worst move you can make is leaving your savings parked at 0.01% because it's convenient. That's money you're leaving on the table every single month. So figure out how much money you can add to your high yield savings each month and move it over to a SoFi account. If you found this helpful, please hit like and subscribe. We'll be leaving links in the description down below to our favorite high-yield savings accounts. If you want to check out SoFi to get a high interest rate on your savings, as well as getting the sign-up bonus when you set up direct deposit. This is Bullet Finance. I'll see you in the next one.